Hey everyone, welcome back to the Capital Mindset Show. Hold on, this is actually concerning. Why is this stuck here? Is this going to be stuck here the whole time? Okay, so it looks like I'm going to have to reconfigure this thing because this is not supposed to be doing that. Okay, so let me actually set this up for everyone. Just give me just a quick second, everyone. All right, so copy, let's delete that, and let's do it again. Chat, and let's paste, apply. All right, cool. And then let's put that over there. Apply, close. There we go. All right, so sorry about that. Sometimes technology is your friend, other times it's annoying as heck, okay? So let's actually, what a way to end the week, right? So yeah. Oh, thank you, Zuni. I did have a nice week. I hope you had a nice week as well. So everything is working as far as technology goes, and it's actually awesome now because this actual iPad Pro is a good investment, I guess, for both things. Even at work, it's really useful. I never knew technology had gotten so good with note taking on these things. So I don't even need paper anymore ever. I can just go to a meeting and then just take my notes, go wherever I want, and then just carry it around in a small little bag. So yeah, crazy stuff, crazy stuff. So I have the chat here looking, and I think it's actually even better for me to look at it this way. This way is much better. I can have it much bigger. Okay, so yeah, crazy week. A lot of ups and downs. Today we had all the travel stocks rising. Thursday we had all the travel stocks declining. I don't know if you guys saw that or you guys are paying attention to those stocks. For example, Carnival Cruise. Oh, by the way, you guys like this wall that is totally not zoomed in? I'm totally not a green screen. You ended up positive today. I see. All right, so I've still been buying the dip. Good. Yeah, same here. I've been a little bit more aggressive, as I've been stating. Kind of obvious. When I purchased that GPN position, that was kind of like out there, right? I feel like a lot of you guys also thought it was out there. But like I said, I had some cash to deploy, and I just deployed it. I found an asset I liked. But all in all, I am starting to get more aggressive. That hasn't changed. I'm getting pretty excited. Some of you have been showing or talking about, what is this? IP address. I don't want to do that. I'm trying to actually set this up so we can actually utilize this. Connection, redirect. Oh, that's right. Do I have to open this up? Yeah, I do. Okay, so, yeah, no. While using app. Oh, yeah, we're not on that Wi-Fi. Let's go. I have to connect my iPad to the correct Wi-Fi so we can actually stream it. If I so desire. If anyone has a question that requires this, I love to just go on here instead. Yeah, let's go on that Wi-Fi. I have no idea why the iPad wants to connect to that Wi-Fi. That's so stupid. You don't want that one. You should connect to this one. All right, redirect. Let's go to that one. There we go. All right, so that's ready if I ever want to or I need to actually bring this up because that would be cool. Okay, so looking through the comments, you guys can ask anything, by the way, as always. And you know the policy here in Capital Mindset. You guys can ask anyone. Tear down this wall. All right, so watch this. We can just travel to Rio de Janeiro if we just do that. Now we're in Rio de Janeiro in some, woo, magic, right? So now, because we had a comment from Bashar to tear down the wall. The wall is now torn down. Thoughts on, okay, so here's the thing. So let's actually go on the first question. Thoughts on Wells Fargo price to book of 0.88. And thank you for adding me at Capital Mindset. So the thing with... at the end of the day, let me actually start this. Computer screen mirroring. No, I want a phone screen mirror. All right, cool. And then I want to do that, enable that. Let's go. All right, so thing with Wells Fargo is they're heavily exposed to the mortgage lending. If you actually look at their balance sheet or look at how much of their book is dedicated to that mortgage spending, or not mortgage spending, mortgage lending. My apologies. I'm kind of multitasking right now, so. All right, so that's good. Let me just move this over to the side, and then I can finish up my thoughts. Okay, why is it so big? Just calm down. Just get over there. All right, cool. But yes, so to finish off the thought, the reason why they're probably trading at a price to book is that the market's kind of being pessimistic in all with regarding mortgage lending going forward into the future. Rates are rising. Will the appetite for home borrowing be the same? I don't think so. In fact, funnily enough, you guys should, I know you guys all know Strongman. He did a video. I completely, clicked on the wrong one. I completely agreed with him today when I saw his video saying how he bought a house when rates were really low, and now he's expecting, that, the top is in. He made a joke, I think, about the ape father, that the top is in. I think, he's probably going to be right on that. But if you think about it from that perspective, I'm connecting the two dots here. It's that Wells Fargo is heavily exposed to that business line. Not all banks are created equal. So a lot of people paint broad brushstrokes with, banks. They say, well, price to book is below. It's below price to book, therefore buy it. No, not necessarily. You want to be careful with that. Just applying it to everything. Baba is a crypto. Why is there no publicly traded? Well, I mean, the closest thing you got to that is Rick. You can ask anyone in the chat. I think Julius Caesar is almost, I guess, an expert in some regards to that. Obviously, oh, wait, you already know about Rick. Bullish on Rick. There we go. Okay, so let's see here. Can you check out IVR stock? The price has fallen so much. Dividend, it's huge. All right, so let's. I guess we can pull that up. I don't even know what the stock is. I don't know every stock in the world by name. One day. Okay, so already I can see Mortgage Capital. Is this an REIT? If it's an REIT, I kind of can tell you automatically why. Is it? Yeah, it's probably an REIT. I can already tell just by the name. And if it's a mortgage REIT, then yeah, I'd always be cautious on mortgage REITs. Actually, you know what? I saw a comment. There was a comment I received in the REIT video, which, by the way, I think the REIT video was one of the, I guess, well, that one definitely took me a long time. It was costly to me in terms of time because I had an audio bug. So I recorded it an hour long, and then I looked back at the audio, and it wasn't working. So I was like, oh my gosh. And so what I had to do instead was I had to re-record it, unfortunately, but whatever. I didn't care. I wanted to get that video out there. And I think I forgot to mention this in the second time around because I did see a comment because technically I did oversimplify it. I mentioned this in the first one. And if we see the footage of the first one, I went on a whole spiel as to why I'm oversimplifying cap rate because technically it's NOI over purchase price. And I said rental revenue, but I just wanted to simplify it for the sake of the video. But there was a comment in here. I'm trying to find it because it relates to your question, by the way. Let me see where it is. I'm not going to say the person's name, but I did get an interesting comment that someone said, your channel is going to go to zero for bad advice for other people. And I think it's because the title of the video, which is supposed to make fun of the concept, because the title of the video was Monthly Dividend Income Payers for Passive Income. You guys who are familiar with Capital Mindset, we've been talking about this on the Discord. People who are familiar with Capital Mindset know the style, but I guess people who are not familiar, that was kind of like it fired back, I guess, because if you didn't watch the video and you saw the title, you're probably like, oh my gosh, this one of these people. So, obviously in the very beginning of the video, I was like, oh, shame on you for clicking for that reason. But, all right, where is the stock? I'm trying to find it. Because I want to connect it to this. And I did respond to this person in somewhat of an equally the same way. Oh, yes, AGNC. Here it is. So I got a comment about AGNC. So I'm going to take the time to kind of explain this, hopefully in the best way possible. So if I go to the whiteboard, this should work. Oh, wait. It's not set up yet. Okay, so let me set this up first. So actually, we do have to do this whiteboard, and then let's do this. Okay, and let's go to, let's view. Beautiful. All right, so the whiteboard's here. So we have two classes of REITs. We have what's known as equity REITs. I'll just label it as E, and then mortgage REITs as M, right? So two classes of REITs. These REITs, essentially what they do is they borrow, so they take on leverage. I'll put LEV and then LEV for two different reasons. So a mortgage REIT takes on leverage to then essentially give out leverage. So they give leverage out. And they take on leverage to buy an asset, right? An asset, but let's call it a real asset, right? Because it's technically real asset or real estate. I'm drawing like a kindergartner. I apologize. But regardless, you guys are getting the point, right? So equities and mortgage REITs. So mortgage REITs, you'll tend to see higher dividend yields, right? Tend to higher dividends. And that shouldn't matter. These, you don't want to fall for yield traps. So yield traps, this is a big problem with newer investors. They look at that higher dividend. They go, ooh, high dividend, pays a ton of money. I'll get rich off of 10%, 30%, 50%. I haven't seen a 50%er, but I'm just saying. So if I actually look at IVR stock and we actually pull it up here, let me show you guys. So let me position it nicely. So you can kind of see that dividend yield is 33.03. And I'm trying to be a little bit more verbal. Let me actually zoom in because just in case the resolution doesn't scale well. Because sometimes I know this is rendering in 1080p, but the screen is in 1440p. So sometimes it does wacko things. 33.03%. I know that some of you are saying, oh, well, you know, that's probably not sustainable. That's maybe the instinctual, not always. I don't want to say every single time you see that's not sustainable, but it tends to be the case. 33.03%, you know, seems too good to be true. Sometimes when it's too good to be true, it probably is. So yeah, AGNC was another one that I was asked about, and the question was why not AGNC versus Realty Income? And within the comment, they were saying, well, you know, the balance sheet, and I read the question exactly. Could you explain why Realty Income would be better than AGNC? Both are monthly dividend REITs. When looking at some basic metrics, I look at AGNC and a far better position, but I must be missing something. And I did respond to this person exactly that. Realty market cap of 39 billion, cash of 152 million, 0.25 per share of debt. So this person was looking at the cash per share of the REIT and saying, well, it's a $39 billion company with only 152. That's actually not, let's just erase it and rewrite it. 152 million cash, right? So this is the cash pile, this is the market cap. So something doesn't square up here. And they were looking at the other company and they said, well, AGNC, right? So this is O, AGNC had about what? It was, $6 billion market cap. So 6 billion and cash, 12 point, I'm just going to take it their word for it. That was 12.3. Without looking at it, I can probably say that the 12.3 billion, market cap is 6, cash 12.3, and debt of 45. That was the key. So then the net. So debt of 45 though. So debt 45 billion in debt, and the debt for O. Did they list that? Yes, they did. 16 billion in debt. So $39 billion market cap, $6 billion market cap, and then we have cash here. Debt on the bottom, cash here, debt on the bottom. Only difference is Realty Income is a equity REIT. So equity REIT, mortgage REIT. With these mortgage REITs, they're not buying real assets, so a little bit more exposed to rates in the real term, while O has properties, and these properties generate cash flows. They can raise the rents. They have a value. They're not really, you could say the value is actually affected by the actual rate of interest or the cost of capital for everyone in the market, but more so, I'd prefer in every case, and this has been true for a long time now, that equity REITs stand to have a stronger position versus something like a mortgage REIT. Even those mortgage REITs, newer investors look at that and they fall for the yield traps. Okay, so that kind of answers that question, hopefully. But yes. Okay, so going back to some questions here. My gosh, so many questions came in. I mean, this is a good problem to have. Okay, so scrolling through. Elon Musk is worried about population decline. Literally the only reason why I have kids. Okay. Yes. Let's see here. A father is traveling if it pays. I know we're down a lot in this market, but I still think big spike in the VIX is coming for capitulation. Absolutely. Yeah, probably. Yost, okay, so that's questions. I think the whiteboard is not working. Was it working afterwards? Did you guys not see that whole thing? That's weird. Yeah, was the whiteboard not working for you guys? Okay, so saw this old video, not liking 3G Capital. I'll pull up this comment because this comment's always interesting. You guys saw nothing. No way. So wait. When I do this, nothing comes up. It's just a black screen. No way. That's so crazy. I can see it here, and it's like as if I was filming a normal video. That's crazy. All right, so I just can't use whiteboards, I guess, for streaming because I guess it's maybe too much, but okay, so it can't handle that. That's sad face. Whatever, I'll make do with whatever else. Well, actually, no, there is a way I can cheat the system. No, yeah, let's cheat the system. So here we go. Check this out. I'm apes together strong. So check this out. All right, this is kind of cheating the system. You guys can see it now, right? Yeah, you can see it now. Okay, can you see it now? If you can't see it now, then yeah, we're absolutely not gonna be able to see it. Like, can you see me right? Still no. You're joking. No, you guys are trolling me. Oh, you're bringing colorblind jokes. Yeah, because I revealed to the Discord community last night that I am colorblind. So, fun fact. Oh, no. Now you can see one of my... He's doxed. I'm going to have to text him that he doxed himself. I'm going to text him right now and say, hey, you just doxed yourself, son. Well, that's not even his real first name, so it's fine. I just came back from having a lake day, and I think he's he just texted me like profanity. All right, so let me just tell him he doxed himself. Not really, but like as a funny. You doxed yourself. All right, so yeah, what I was basically saying is the actual construction of these companies. You had O, Realty Income, AGNC, right? And then so you have basically what this person was pointing out was, let's say, I forgot the exact market caps, $35 billion market cap, $6 billion market cap, about $150 million in cash. What was it in terms of debt? Let me see that here. Yeah, what would you say? Person, you said, I think for the purpose of this example, it's fine. 16 billion in debt, and the AGNC was another 12 billion in cash and 45 billion in debt. Again, only difference is how that is being executed and or / portrayed. You have Realty Income that's spending on real assets, while AGNC is spending on mortgage assets. So all day, every day, I'd prefer the equity REIT. All right, so that's basically it. That's all I wanted to say there. And, we kind of figured out how to do that. Let me bring this back. So now we can, see the whiteboard if I ever draw the whiteboard. Okay, so let me see any questions. White screen. Okay, no, yeah, you guys can see it now. Good. So you guys are bullish on Disney, like actually. So I'll tell you guys what I was buying. I did buy a decent amount, not decent amount. Like we've been nibbling. That's basically all we've been doing. So nibbling on some shares here and there. You guys probably saw the portfolio is updated last night or sometime. It should be update as of the 16th. It didn't update today. I did buy some stuff today, but that'll probably update next week. So I'll tell you guys what I bought today. I bought some Netflix. That's pretty much it. So I just bought some Netflix. I think I bought just a couple things. I bought some Bank of America, just a little bit more. But it's still a small part of the portfolio. It's really small still. 3M is one I'm really considering. So I'm considering 3M. I'm going to do like a video. Probably, most likely, and when I say most likely, almost for sure, that I'm going to see, okay, these are the stocks that I'm kind of really looking at, that I'm interested in, and not that I'm buying them right then and there, but I'm interested in. Okay, so let's talk 3G. Yes, I wanted to get to 3G. Thank you for reminding me. And again, if I don't get to a question, just ask it again. It's not on purpose. My mind sometimes races pretty fast. And at any point, this door is going to open, and I'm going to receive a milkshake from our sponsor. Well, we'll get to that. No, I'm kidding. No sponsors, but hey, if the company is listening and they see that milkshake and they want some product placement on this live stream, All right, but anyways. So my thoughts on 3G Capital, I tend to not touch this company or any company, sorry, not this company in particular. I don't touch any company that this company touches. I do not like their management. I just don't. I don't know if it's kind of like it became sort of an internal meme that I have with that company where I just see, oh, that company's involved. I don't want to touch it, or I don't want to deal with it. And yeah, it happens, right? So 3G Capital, they've been involved with Kraft Heinz. A lot of their strategy, and I can point to a bunch of other companies too, Anheuser-Busch, but basically a lot of the strategy of this company is to cut costs. So if I actually bring back the whiteboard feature, and do you guys like the whiteboard feature? If you guys don't like the whiteboard feature, I might I don't have to do it, but I like to do it because if I ever want to explain something visually, I do that. But yeah, 3G Capital, what they try to do is they basically have one main strategy, and that's cut costs at all possible. And I don't like that because when you cut costs, broadly speaking, you cut things like, investment, or more specifically, you have R and D. I'll just say it like that, and D, because I always suck at writing the and symbol. I'm terrible at it. So research and development, and we saw that with Kraft Heinz. Kraft Heinz had neglected investment in their brands for a long time. Unfortunately, it's unfortunate, but that's just how it is. And for example, also with Anheuser-Busch, a lot of the similar kind of influences you saw there showed themselves up, but it tends to be the fact that I look at 3G and I don't really want to invest in it. I think they're also involved with Burger King. You can see how that's going for them. I'm just dissing them a little bit too hard maybe, but sure, would I not? And I'm pretty sure they're also involved in Stone Co. But Stone Co. is not really their fault. Stone Co. has a variety of problems going on domestic with the country and all. And because Stone Co. is a Brazilian company, so when you invest in a foreign company, you have to be considerate of the cross-currency risk. So, all right. Let's see. See, I like it better to see it on... Okay, so I have the chat here open on YouTube because it highlights when you actually add Capital Mindset in red, but then on this chat, it doesn't. So then I have to cross-reference this. Okay, so let me find your comment, fake alias, because I see your comment there. There it is. So GME is betting the market year to date only down 11.5% thoughts. Oh, is beating. Oh, sorry. Okay, beating the market. I was like, is betting. It's gambling on the market. GameStop is gambling. So yeah. GameStop is beating the market, technically speaking, because the rest of the market is down more than GameStop. And let's actually pull that up because, why not? Let's have some fun with this. So let's overlay, and geez, that's so much to that side. All right, so GME. And by the way, I'm totally sponsored by Google. That's why I'm using Google Finance to show you the stocks. So please check out our sponsor, Google. All right, so GameStop. Yeah, GameStop is up 7.56% along with a lot of probably the travel stocks. So they did dip on that day. But yeah, let's look at that year to date. Year to date, they're down 11.58%. And if we overlay that with the SPY, we can kind of see, yeah, they are technically beating. So they are beating the market this year. So had you invested in GameStop at the beginning of the year or the S&P 500, you would technically be better off investing in GameStop. Yeah, that's funny. But in reality, longer term, I don't think that's going to be the case. Okay, so that's just my opinion. I think that I'm just pointing this out because I think it's funny too. I think you think it's funny, and I also agree with you. It's absolutely hilarious. Okay, so let's see this. Are you interested in adding more meta? Yes, I am. Oh, yeah. I actually added a little bit more meta, Ricky. So let me pull up your question here. But where are you at? Why is it? You see, I wish that's the one thing I wish it would do. I wish it would highlight, because it doesn't highlight. So are you interested in adding more meta, and would you cap your portfolio exposure at? So what would I cap it at? For me personally, I don't see it getting above Google or anything like that. So the answer is not 20-ish%, but it could easily get to 15-ish% around there if the price gets right. So basically I have a halfway to go. Of course, if more capital comes in, and as a broad speaking in terms of my portfolio, I'm adding to other positions, then that gives me a room to move that up in terms of dollar amounts. But that's that. All right, so let's see here. Capital Mindset. What do you think Elon's recent comment on Lucid? Oh, okay. Let's talk about that. So, what do you think Elon's recent comment on Lucid Rivian? It seems. Oh yeah, and then your chat. So I have to actually move this up. All right. It seems all that matters with EV companies is, can you make an EV on scale no matter the vehicle's quality. Yeah, like I'll say this, the quality of the Tesla Model 3 has improved. It has improved. So the newer iterations, the quality is much better than the previous iterations. I think these are things that improve across time. My wife's Lexus is phenomenal. The build quality is really ridiculous. I think it's really awesome. All right, so I always tell her, and you could ask her if you know you got the chance, but if you had asked her like, okay, what does your husband say? Does your husband comment on the Lexus a lot? And like, yeah, I do. Every time I'm in it, I'm like, wow, this is very comfortable. I feel the build quality. It's really good, really sturdy. I think when Lexus releases their electric vehicles, she might actually probably stick with that. But yeah, I think Tesla's making massive improvements. For example, in the one that's coming, or the Model 3 that's coming, I think the delivery is like July, August, around there. The windows, at least in the front, are double pan, so it's going to help with the insulation, the sound. The rear ones are not. In the Model Y, they are. A lot of quality of life features. If you actually go and see one in the store, you'll see that the interior quality is a lot better than it was before. You get wood paneling on the sides, stuff like that. So all in all, it's pretty good. But yeah. Okay, so let's see more questions. See, I like it here because it highlights it. So right here, I don't want to skip anyone's. MP, I see your question. Okay, so I think MP, that's so weird. MP, I don't think it shows you here. Unless I'm blind. If I can't find you here, I will just yeah, you know what? I'll just say your question. Yeah, that is so weird. Why is that? That's really trippy. That shouldn't be happening. That's a glitch. All right, so MP, I see your question. Hey, Fabio, thoughts on the asset management company, the Carlyle Group? I don't really have any thoughts. Asset management companies are a little bit... The thing with asset management companies is their job has been really tough, and it's going to probably get a little bit tougher, right? So the valuation on a lot of these asset management companies is decent. My favorite asset management company, if I had to pick one gun to my head, is actually Brookfield Asset Management because of the all alternative assets that they're in and the way the business is structured. If I just kind of giving my quick thoughts there. Northman Trader saying that QT hasn't even started. In fact, that the Fed added to the balance sheet in the last week. Thoughts on QT? Yeah, so like technically speaking, in traditional sense, is it doing it to you too? I think it is. Okay, I'm getting upset with this software, Ben. It doesn't show you. But anyways, Ben's question about QT, I think is also correct. Is it restricting certain comments on me? I think it might be restricting certain comments. So I apologize for that because I'm looking at both, and thank goodness I'm looking at both because otherwise I wouldn't be able to see your question. But Ben, so Northman Trader saying that QT, yes, that is true. That the Fed hasn't actually unwinded its quote unquote balance sheet fully yet. Like we're not in a technical QT. That's what they mean by that. But the Fed is raising rates. So for whatever that means, right? If you're Snyder pilled, you know what I mean. Okay, so this question does come in and it says, why would you buy Netflix? Competition is insane. And they only have Stranger Things going for them. That's not necessarily the case. So I said this in the Netflix video. Every time I see data on the most viewed shows in the United States, for example, it's almost consistently Netflix. It's actually terrifying. Each year you'll get like one other player make one in the top 10 in terms of views in the United States or even in other Western countries. It's kind of I don't know what to say, man. I don't know what to say. And I'm noticing, for example, there is a lot of competition. A lot of the sentiment is actually what I like. I like Stranger Things. I do. It's not my favorite show on Netflix. I like other shows. But again, I find that not only me, I can't use myself because that's anecdotal, but I see that the data shows a lot of people, they consistently make it to the top 10. They dominate the top 10 consistently. Now, if that starts to change for whatever reason, which I don't think it is because I'm looking at what the other guys are producing, and frankly, I see a lot of it is lacking. The most recent Obi-Wan Kenobi episode is actually pretty good, by the way. It's decently good. It has some flaws in terms of like the writing, but in terms of visuals and not nuance, nostalgia. It's a lot of nostalgia porn. I'll tell you that because of it's Darth Vader. If you really like Darth Vader, it's an episode to watch. They're just teasing us for a whole Darth Vader series. They're going to do that, and then, of course, I'm going to just have to watch even though. All right, so thoughts on lesser exciting credit service providers? Okay, so actually I was just looking at Capital One when I was out on the lake today because they got a upgrade for whatever reason, but they were actually up a decent amount. Now, the thing with these other ones, okay, cool, I just got a text. All right. The thing with these other ones, these lesser known ones or less exciting credit issuers is the quality of their lending. Okay, so that's what you want to pay attention to. So Discovery Financial Services, you want to be very careful with them. If so, in a good economy, they're fine. In a bad economy, they're not going to do as fine. So something like American Express will do better because American Express, the quality of their books, so to speak, as we'll call it, is superior to that of Discovery Financial Services. And then something like Capital One is similar, but not as bad. Capital One is a little bit better. So that's just my quick thoughts on that. Okay. Oh, you saw the PayPal video. Thank you. Awesome. Netflix, my Betflix. I own one share. Hey, you own one share. That technically means we are fellow shareholders. So we should have a shareholder meeting. Everyone, let's all go to the Netflix headquarters and say, well, we control this company. All right. Could you imagine we did that? So for Austin's actually focusing on the corporate life. So he didn't want to continue. So, but we're still best of friends. All right. We always hang out. So I can't tell you where he's working at, but because I don't want to dox him like that, but. Capital Mindset, was Warner Brothers Discovery on fire sale when it was around? Yeah, I think so. I mean, I want to wait till the numbers to come out, but I do want to add more to Warner Brothers Discovery. Those are probably going to be my 2 streaming plays, and that's about it. Albertsons. So Albertsons, you probably asked about him because of Albertsons, because Albertsons was one of his favorite companies back in the time when he was around. So Albertsons is a grocery store company, has a lot of brands. They're trying to divest some of them, last time I remember. And that was one when the valuation model that we used, or that we've shown in the channel back in the day, was saying that it was incredibly undervalued at the time, and it was a pretty good one. When he actually was kind of talking about it, or we were talking about it, I think it was a little bit lower. Now I think it's actually corrected, if I remember correctly. So ACI, and I'll pull it up for you guys. Yeah, Albertsons back down to 27. So. Albertsons. And this is actually, let me pull that here. Where's your comment? Talk Albertsons is this one. Yeah, so this is Albertsons. We've talked about it in the past. There's a video on it in the channel if you guys are curious. Okay, so the people who aren't buying the dip will look stupid in 5 years. Well, I love the name and the picture. The picture's amazing. Amber Turd. Wow. Fantastic. So I think that, each and every time that there is a bear market, people will always say in the bull market that they would buy the bear market. It's another thing actually buying the bear market. The thing is, everyone's in a different circumstance. So, for example, if you're in the position that you can, in fact, buy a market, right? That would imply. Let me actually pull this up. Where'd it go? Where are you at? Did I hide it? Hold on, I gotta actually find where I put this. Where'd I put it? Where did I shove it? The whiteboard. I lost my whiteboard. Whiteboard. Whatever. Okay, I don't have a whiteboard anymore. I lost my whiteboard. It's somewhere. I think I tucked it away down there, but somewhere. But anyways, it's another thing to actually buy the market or buy the bear market versus saying we're in the bull market and saying, I'll buy the bear market. Oh, yeah, you'll definitely buy the bear market. So, because it's scary. But anyways, you want to focus on a couple things. So if you're in a situation where you actually probably need the cash, you definitely shouldn't, right? This is a circumstance where, unfortunately, you You have to have capital. Capital breeds opportunity. You don't have opportunity in the first place. You don't have the capital to take advantage of that opportunity. And also, like, think about it from this standpoint. Do you have a fixed amount of cash, or do you have an inflow of cash? That also changes the strategy altogether as well. Because if you have inflowing amounts of cash, yeah, you can afford to kind of buy in over time, right? Because if it keeps going down, you have an inflow of cash. But if you have like a fixed amount, let's say, you had someone that has $100 million, right? And that's all they have, 100 million. So you go all in right now. Well, you're making a definitive point to say, yeah, this is the bottom, basically. If you bought it all today, you're basically saying this is the bottom. Or, you're of the opinion that you just don't care, but hopefully you're being truthful on that. Maybe you're just saying that, and then when the market comes down further, you're gonna scare out, right? And you're gonna do something silly. But all in all, if you have, let's say, $10,000, $30,000, but then you're making money each month and you're having an excess amount of capital each month to deploy, yeah, that changes it. So then you can keep buying the dip. But then there's still, even then, people are not gonna do it. They're gonna try to time it, right? Every single time they try to do it. Bump up. I don't know what I have to figure out like a catchphrase or something. So Maximilian, so thoughts on risks for GPN from recession. So here's the thing with GPN. So if a recession hits and spending does drop, you will see lower volumes. Lower volumes equals lower revenue equals lower income. So yeah, from the perspective of a slowdown, GPN does stand to actually get a little bit crunched a little bit. But I think the big drawdown that we did see is kind of actually pricing a lot of that in. Not all of it, because it can get really bad. And if it gets really bad, there's still more room to fall. Then the question is, if you liked it at those prices and you believe that the world will, get out of it, the world will adapt, the world will improve in the future and be at a better place. Or, you could be a Debbie Downer, but if you think the world's going to be improving, then you want to have or take advantage of that and then probably add. So again, like for example, in my position, what I did was I had some cash that kind of came about, and I was like, all right, I want to go out there and find some assets. GPN was one of those. I liked it at that price, and I think my average cost, I brought it down a little bit because I did average down into it. When was that? I think at the beginning. I think it was on Monday that I did. I'm pretty sure it was on Monday. I did the live stream on Tuesday. Yeah, so I think it was Monday. It was either Monday or last week. I have to check the buy order. But I know I added some GPN. It's not a tremendous amount. And then if we see, really low share prices, then that changes the story. I might actually go a little bit heavier, but it has to be at the right price. And then there's so many stocks out there now that I'm actually kind of watering my mouth. For example, I also want to highlight the fact that a lot of industrials are getting absolutely hammered. So we talked about briefly 3M. A look at the chemical companies such as, LYB has already come back down below, I think, my cost basis, which is really fascinating. So LYB is coming down. And so some thoughts on that. I'm actually going to be definitely reinvesting all my dividends on LYB, which is awesome. And we also have Dow Chemicals down, DuPont de Nemours, I can never pronounce their name, but a lot of material stocks are down. Why? Well, energy inputs are rising, but what's kind of the perfect storm is the expectations for demand is also declining. We also took a look at inventory levels. I was mentioning this in the Discord a little bit, that inventory levels went from a positive to a negative. It was a big drop. I think it was, the numbers off the top of my head was a measure of a 25 or 23, and then it went to negative 23 or 25. But point is, it went from positive to negative, and it was pretty drastic. So basically what we can gather from that is that there was a lot of, and we already know this, there was a lot of inventory ordering, right? So a lot of front loading. And then now it seems like there's a drastic drop. So a lot of people are anticipating, they're kind of pulling back. We're seeing this with company after company after company, reporting after report after report. Companies that focus on B2B solutions, well, their customers are maybe on the fence, not going to take their service. So that's bringing down growth estimations for these companies. These aren't positive, right? But you're going to see these companies that are priced for growth. Well, their valuations have to come down, because if everything's going to start to slow down, yeah. GPN, I wouldn't say is priced for tremendous, stupid amounts of growth, right? Because we talked about that on a cash flow basis. They're not necessarily the case. They look expensive on a GAAP net income basis. Now, you look at something like Adobe. Adobe's priced for that growth. That's probably going to come down. Companies that are heavily invested in the cloud, however, it seems like the cloud is a sticky business. Obviously, if you guys are ever working in the cloud, you guys would probably figure that out pretty quickly. Cloud is very sticky. Oracle's coming out with their earnings. they showed signs of optimism and actually growth acceleration. You see AWS is still executing on all cylinders. Google Cloud is still growing. Microsoft Azure is still growing. If anything, it's the other sides of their business that might be suffering. So for example, Google, it's advertising. If companies are going to be less excited to actually spend on advertising in the future, when I say excited, it's because they're trying to do a cost-benefit analysis, and that's normal, right? All companies will do that. So yes, that was a little bit of a rant. Emerson says 5 big soda bottles for $5. Bullish signal. Yes, that is a bullish signal. My wife actually purchased Target recently because she just loves Target. She just said, I have to have it in my portfolio. We all have to have that stock that we have the right to own, I guess. Capital Mindset. What about block stock? I'm down 50%. Time to buy more. RK, I cannot tell you that in good conscience, because that would be almost like giving you personalized financial advice. Okay, because I'm not able to do something like that. All right, but let's kind of explore it. So Square, in theory, the premise should be that if you liked it at the price you were acquiring at, and you really did think it was a good price, if you really did think so, then if the price is lower and you do a reevaluation on it, and if nothing has changed in the thesis, that's the key word, because people say this incorrectly when they say, if you liked it at that price, you should like it at, no. That's only true if nothing has changed, because what if something big has changed, of course, and you got to try to remove the emotion out of it. That's the hardest part, because sometimes when we look at a stock price of let's look at it like this, right? Oh, down 64%. How do I not think negative things, right? Okay, so in essence, we have to try to block that out. Try to look at it objectively. Has anything changed with the business? Has anything deteriorated? Has anything made it so that my previous thesis is no longer the case? If not, then yeah, that would be in theory the case. You should think about acquiring more. Now, Block, same thing with GPN, except they were in fact priced for more growth. Again, Block is actually more akin to a PayPal competitor than really a global payments competitor, but similar thesis there. Same with PayPal. If volumes tend to trend down in terms of payment volumes, people are spending less money. Well, then that brings lower revenues, lower profits. Lower profits, they have to come down. All right, so capital mindset, thoughts on Markel. Okay, so Markel. So Markel is, let me actually bring up your full question here because, nope. Yeah, there we go, because that has to be adjusted. All right, so thoughts on Markel's moat since they have a smaller insurance offering. Really like the company, but I can't understand this side of the equation. So they do a lot of reinsurance. So they basically help share the risk for other insurance companies, and they have specialty insurance businesses. So they, for example, sometimes insure transference of artwork and stuff like that. So they focus on their little niche, and then they grab that capital and plow it elsewhere. So some other insurance companies aren't going to focus on that. So, they're focusing on their little niche. They're being very successful at it. They're one of the biggest at it. And in terms of reinsurance, there's always going to be business for reinsurance. Insurance companies are always going to want to spread risk. Less risks, the better for them, right? Because at the end of the day, they'll make money on the spread of what the risk profile is, so how much actually gets paid out in terms of claims versus how much is brought in. So as long as they can create a more secure spread, that's going to be good for them. So there's always demand there. All right, so yeah, okay, I'll email it to you, Jimmy. Capital mindset. We broke the record. The Dow closing red 11 out of 12 weeks, beating 1929 record of 10 weeks. 11. That's when the Great Depression happened. Guess what's next? I don't know. What's next? I don't know what's next. Armageddon or something like that. But yeah, no, yeah, it is a decent down. But remember when we were talking about how, in theory, with the kind of connection of the markets, you should see larger drawdowns and then larger rallies. We've spoken about that a little bit. And that's actually Mike Green's research, too, kind of showed that exact thing. Or in theory, that should be happening. But, yeah. I'm not sure if my comments are seen. I can see your comments, Mandy. I can see your comments here. I can see your comments definitely on the YouTube's variation on it. And I think my delivery has arrived. Oh, yes. Okay, so The good time to segue on today's sponsor. My wife, thank you, my wife. Which one's is that it? Heck yeah. All right. Heck yeah. All right. So let's let me I gotta do this who's calling me? All right. So today's sponsor, we are sponsored by No, I'm kidding. But this is the custard shake that I've told you guys about. That is, oh, they put my my straw in wrong. This is the part that should go in the bottom. Now I have the sharp part pointing at my mouth. This is dangerous. We're living life dangerous, ladies and gentlemen. Oh yeah. Oh yeah. Ooh. Okay. So yeah, and I did get a burger too. Apparently. What is this burger? Oh, it's a cheeseburger. Okay, so I'm not going to disgust you with gorging my mouth, unless you guys are into that, and then just super chat me and I'll gorge myself. No, I'm kidding. Turns into a different kind of channel altogether. Who cares about all that stuff? This becomes a food channel. All right, I'll review this. This is a really good custard shake, I'm telling you. That means we should pump the stock. I'm kidding. No. It's actually a micro cap, so I don't want you guys to do that at all. Don't do that. Okay, so Joseph Carlson says Starbucks is undervalued as... Okay, so that, I like Starbucks as a company. I wouldn't say, necessarily the stock right now, but it's a good company. Like I said, Joseph is it's easy to be good at this, by the way, but he's really good at the story part, but he focuses too much on that, and that's unfortunate. And I said that as a constructive criticism. I think he saw my video and he took it the wrong way. It's supposed to be constructive criticism, not like I was telling him he's stupid. I don't think he's stupid, but, he can be smart and just, not be good at that. All right, so Capital Mindset, thoughts on Shinokin. Oh, Shinokin. All right, so yeah. They're a Japanese company. They're like a spawner in Japan. So spawner as in they have many businesses within them that are organically grown. And exactly that. Bashar is actually... Oh, and I have to readjust this. Hold on, let me just readjust that. They build and sell houses, but also manage them. They sell services and properties. So they basically upsell a bunch of services to those customers that they have. And they basically focus within their niche, which is real estate. So they're not really expanding beyond anything crazy. So I like Shinokin, actually. But Shinokin... I'd probably buy it on my interactive brokers, because that's why I like interactive brokers. The availability... Uh-oh. Okay, I just got I have to gorge. Okay, so I'll get to that in a second. But yeah, I do have to probably buy them from interactive brokers. That's why I like the brokerage, personally. Okay, so I did get a super chat. So you guys are gonna see the burger. Okay, let's see. I don't like to eat in the office. I like to keep my office clean, but I guess we're gonna make an exception today. Okay, so the burger. So I put a napkin down. I'm just letting you know the process. Oh my. All right, how do we get this out? All right, so JP, you've single-handedly turned this into a whole different kind of live stream. But we'll get back to stocks after I show this burger. And I'd be lying if a part of me didn't want to eat this burger right now. I won't eat the whole thing. I'll just bite it. So this is the burger. All right, so that's the burger. Nothing it's not going to win any prizes for looking amazing, it's not. Oh, you know that YouTuber? This is running on empty food review. You know that guy? I love that guy. That guy's hilarious. That guy's literally so he was actually on CNN. All right, I'll tell you. Pretty good burger. Okay, that's a pretty good burger. Satisfying. All right, we are officially a food channel. We are a stock food channel. What are the wait? What's the horn? I don't know what horn means. Yeah, I don't know what the horn means. Tell me what the horn means, and I'll fulfill the horn. All right. Okay, so let's see what other comments, and then as soon as you tell me what the horn means, I will do the and my horn. I don't know what porn means. All right, so going back to the other questions. No. I will not show the stuff. I don't know if that's Canadian for that, but that's not that kind of channel. Yeah. Okay. Yeah. I've never heard that word be used to mean that. All right. I did not know. I didn't know what it meant. All right. So here's some other questions. Okay. So let me adjust this question. How do you think about growth capex? So what are the prime examples would be like marketing expenses that would benefit the brand over time? Same with R&D, operating leases, maybe even hiring expenses. Yeah, all that can be, you could count that. Anything that is expensed in order to grow the business that would otherwise reduce the cash flows. So it was stuff that maintains the business, maintenance expenditure, and then growth expenditure, anything that the business is. So like, for example, let's say we're at work, and then we have to spend, a certain amount on insurance for the facilities, inventory, all that jazz, right? And equipment, right? We have to buy new equipment consistently. Let's say we have to buy new lifts or whatever, and we have to expense all that. Cool. Now, what do we need? Let's say we get more clients. Okay, we get more clients. What do we need? We need more equipment. We need more of that equipment. So do you want to punish us in the evaluation because we're having to spend to then acquire new clients? No, you don't want to do that, because then you're going to come down with a less accurate total value for that enterprise. Okay, because then that's mitigating or reducing the value that we're going to return on that growth capex. Because maintenance capex, sure, all well and good, but that growth capex has an implicit return. Because in theory, we're going to get more money in the future. We're going to get some return on that. Thoughts on Callaway Golf, now them owning Topgolf. So yeah, Topgolf, I actually got a email about this company, and I was going to do a video on it. I'm still going to do a video on it. With similar questions about this company, exactly for that reason. So Callaway, the thing with golf is a little bit harder because, well, you have to first understand, where's the trend going for golf? Is it positive? It's negative? And then is the investment necessarily, is it good, right, for Topgolf, right? Is that good? Is that a good thing? Are they going to get a good return on that? I don't know. So I'd have to do research on that before I give an opinion on that like that. Okay, I'm sorry not to satisfy the answer, but I'd say that knowing what I know preliminarily, I'd say that probably was a good buy. Probably was a good way for them to get exposure. Okay, but yes. Okay. What is this? Yeah, the straw. I know. No, I don't even think this. No, this market's not that rough. This market's not that rough. And like, this is the thing. So a lot of people, I guess, are really new to investing, but I never thought this market is actually pretty rough. I mean, you hear my voice on Capital Mindset. You don't see me going like, I mean, I should probably, for the growth of the channel, I should probably 100% be going like, oh my God, recession. Oh my God, fire. We were joking about that last night with thumbnails, that there should be fire everywhere, stuff like that. And sometimes I do joke with that. You probably see like, I uploaded a video and had a thumbnail with like, no fire, and then I got a comment saying, oh, you should put thumbnail with fire. And I was like, I'm a jokester, I like to joke around. And I was like, all right, you got it. And then I re-uploaded the same thumbnail, and I just put the same crappy little fire emoji and just put it everywhere. I like to make fun of that. I think that it's funny to shine a mirror to everyone that those are the videos that do get a lot of clicks. It's kind of funny. I think it's funny, but I don't know if you guys think it's funny. I think it's funny. I can't tell you how amazing this custard shake is. Check out our sponsor, treasuredirect.gov. I love saying that. Capital Mindset, thoughts on Microsoft. Most people agree it's overvalued, but a lot of opinions on how overvalued it is. Yeah. I haven't done an analysis on Microsoft, but I do think that yes, it probably is overvalued. It probably is overvalued, but the market's basically pricing it for quality. Okay, so I have not done an evaluation on it. It does deserve one because it's the only one I think of the cloud businesses that I haven't done. Well, actually, no, I've done one on Oracle either. I probably do them both together because I like the new style that I'm doing of videos where I do multiple at the same time. I like to do those more because I thought if I have more to say, I'll make the video longer. All right. All right. So capital mindset, thoughts on Adobe. I had Adobe because I wanted to, I had a little bit. I already sold it, right? You guys probably remember that. So I bought Adobe like a starter watcher position, and then I thought I'm not really going to get the price I want in a long time, so I took it out. And now I think, what is Adobe at now? Let's actually pull it up because I haven't checked this in a bit. I didn't check it today. I had checked it yesterday, but I didn't check it today. So Adobe's at 360. So if I show you guys here. So Adobe's at 360 bucks, and wow, yeah, it's down a lot. It just fell off a cliff, literally. Yeah, it just fell off a cliff. Well, 15%. It's not like wow, but it's enough. All right. And I love the business. I use all their products. All capital mindset content comes to you through Adobe. I have a subscription to Adobe. I guess what do you call it? Cloud, whatever. Where I use all of their products essentially, and I think they're really intuitive, really easy to use. I'm pretty newer to all that stuff, and I got to be honest. The things I suck at is absolutely. I suck at thumbnails. I'm getting better, and they take up so much time because I'm such a novice when it comes to them. I literally am like, oh, what does this do? And I just play around, and it does unfortunately take up too much time. Unfortunately, I can't dedicate a lot of time to it all the time because of work. But so then I have someone actually helping me with it occasionally. But so. Yeah, I have nothing but positive things to say about Adobe. Okay. Here we go. Capital mindset. You need to add Beavis with your fire thumbnails. Add Beavis. What do you mean add Beavis? You mean like put Beavis? Or you mean like copy him as like inspiration, like put his face. So capital mindset, use a thumbnail with ice and snow instead of flames. that'd be funny. I like to do some thumbnails sometimes to just joke around with the concept because I think YouTube is sometimes a funny place. I think sometimes people appreciate the joke that, like, you know, the comedians who like put a mirror to our face and make fun of the audience in a way. I'm not making fun of you guys. I'm just making fun of YouTube as a whole. I laughed. I thought it was a hilarious joke when I got the comment on the last video saying, you know, that my quote unquote advice was going to lose people a lot of money, when like I think in the video I said, like, if this is what you came for, shame on you. the passive income title, because I did that on purpose as like a joke, right? So yeah, so I like to do that here and there. Capital mindset, thoughts on Spotify and Autodesk. I like Spotify. That's the company I still haven't wrapped my head around. You guys remember all the way back when I was like, oh, I'm like looking into Spotify. I'm trying to understand the company and trying to figure out what's the problem. So there are some issues with Spotify. So for example, like when I look at a company like Netflix, well, Netflix is going to spend its money and it owns its IP. Spotify doesn't own its IP. So each new user is a little bit expensive, right? Because each new user, in theory, I could listen to more music. In theory, I could listen to more music than what it would cost Spotify, or what Spotify gets from me. And it's almost like the advertising has maybe some potential to make better or more money. I don't know. I don't really know those dynamics, but it makes me a little bit worried on that. And something like Netflix, each new user or each new subscriber is just pure profit because they're just already making that. They're making that expense. And that goes the same with Disney, Warner Bros. Discovery, YouTube Premium for their premium stuff. Well, YouTube Premium is a whole other thing. YouTube's its own thing. YouTube's like Google has the best game in house. I'll tell you that. But yeah, capital mindset, thoughts on shorting the market, growth, home builders, energy ETFs. The only one I'd questionably short, and I say questionably, is probably like of that group, the home builders. Just because the home builders, everyone thinks they're cheap and they look cheap, but I don't think they're actually cheap. I think that the market priced them cheap for a reason. So we're actually going to see Lennar report on Tuesday. I'll actually pull up their stock real quick. Let me show you guys. All right, so Lennar here, they're reporting on Tuesday, and if you actually look at their PE, let me actually, we're just using PE again as a rudimentary or basic valuation. Let me do this, and let's just move it to that side. So a P ratio of about 5.05, dividend yield of 2.32. People look at that 5.05 PE ratio, and they go, wow, that's cheap. That's Ross Gerber logic, okay, everyone? I know I'm being a little bit mean to Ross, and Ross has, he's very wealthy, therefore he's right, because that's how that works. When you have millions of dollars, you are correct by default. And he says that the PE ratio of 5.05 means that Lennar is cheap. Okay, so my point is that Lennar probably wasn't that cheap. And remember when I reviewed or was reacting to that interview, it was like around here. So he was buying Lennar here, and that was one of his value stocks, right? I don't know if he said it was high conviction or whatever. I don't think it was high conviction, but he said it was a value stock. And Lennar is now trading at $64. So it's gotten cheaper, right? But the market's probably telling you something. The market was telling you, and it was cheap, by the way. I remember Lennar when it was around here. It looked cheap there. It looked cheap all the way through here because the markets was saying it's probably not sustainable. They're probably not going to get what they want, and especially if the market kind of doesn't correct itself. So a lot of people need to remember that these are cyclicals. So of course, I'm looking at it now. I'm like, yeah, I probably missed the boat in terms of maximum gain on that short, but that's the one I would have shorted. But I'm really short. Okay. Oh, yeah, a Big Mac. No. You get yourself a BurgerFi burger and use promo code Capital Mindset at BurgerFi, and you will not get a discount or a free meal item. Just walk up to the cash register and just say, I'm here because of Capital Mindset. They will have no idea what it is you're talking about, and they will give you no discount, but it will be funny. Yeah, I'd agree with that. Yeah, I thought about doing that. Maybe I'd do that because it probably works with the impression click-through rate. I mean, my impression click-through rate is pretty good from what I saw in terms of the percentages. It's really what I saw was sometimes Capital Mindset struggles to get the newer viewer. It seems like everyone who already knows Capital Mindset will click on the video. It's trying to get that newer audience viewer's attention is the only hard part that we're really having. Or not we, but Capital Mindset is having. So, because I don't make them interesting. I don't make the titles enough clickbaity, and then that's actually something I've been advised to do. I'm like I don't want to resort to this. I don't want every thumbnail to be. There you go. You can pause the video and take screenshots. Okay, Capital Mindset. Okay, so Capital Mindset. Capital Mindset. What are your thoughts on stocks like TTCF, Palantir, which are down more than 60% with your experience and time in the market? Do these stocks bounce back? Palantir at some price, maybe, not maybe, probably, because their business is actually there's something there. There is something there. Tattooed Chef also. There technically is something there is a potential, but it's the probability of that potential. So it's all about execution. It's not about the stock is being down, therefore it must go back up. It's can Tattooed Chef show that as a business they have a viable strategy to do so, and that they are executing well, and that they are producing cash flows, and that they are growing nicely, and that they are managing margins, and they are resonating with consumers in every category that they are in, then you could see that recover. It has to be coming from the business, and that's it. They're in a point in time that's critical, which is unfortunate to them, because since their shares are coming down, they have a lot less optionality in a variety of ways, because lenders are going to be a little bit more hesitant to lend to them at favorable rates, especially looking at their equity value kind of decline, because at the end of the day, they don't have that optionality to sell shares. Now, selling shares is going to be far more expensive than when it was at $20 a share. And I think Sam Galletti was trying to make it work, right? He tried to do it during the liquidity boom. A lot of these guys who did the SPAC boom, they're smart guys, right? In terms of the timing of it. Of course, the investors who got suckered into it, I'm not going to say they're not smart. They're newer, maybe because if you look back, let's take off the rosy painted sunglasses and look back at what happened, right? What were a lot of these SPACs? Well, there was a lot of marketing going on, right? You were being sold them, and CNBC is responsible, right? We do a plenty good share of CNBC bashing here and there. I like to think that I'm an honest critic in terms of sometimes they do say things that are correct, and then sometimes I like to point out that they tell the story in a way that's weird, that kind of they know that people only watch sometimes the beginning of a video. I notice that, that's normal on YouTube. People sometimes only watch the beginning of a video and they click off to the next thing. So CNBC knows that. They're not stupid. They have experts who work in media, right? As in media experts, they understand how things are. They plan out the whole video. So regardless, so kind of getting into that, I think that the SPAC boom had a lot of marketing behind it. A lot of these SPACs were heavily marketed to the retail investor, and they did so in an effort to get capital. I think most of them, I don't actually draw this conspiracy that they're trying to just steal. No, they just wanted to get the most optimal time to raise capital, and that's it. A lot of them probably do believe in their business. I think that's a fly somewhere. I think Sam Galletti does believe in Tattoo Chef. I don't think that he just wants to defraud everyone. I don't go that far. Some people might believe that, but yeah. I went on a little rant there, but. Okay, spicy question. Calvin Mindset, thoughts on Mike Stathis? He's hilarious, but also has many good points and exposes people I would never think are scammers. I don't even know who Alex Hormozy is. One thing you should know about me. This is actually a fun fact. Fun fact about me. But I'll talk about I'll talk about your question in a second. I'm absolutely garbage with names, even like celebrities. There's like a very select few celebrities that I know just because everyone always talks about them. Like sadly, I know who the Kardashians are, right? But actors' names, unless they're like amazing and they're in a role that I really enjoyed, I don't know their name. I'm really bad with names. I've always struggled with it, even with people. And my best friend from childhood, I think it took me 6 months to get to know his name. It's terrible. But in history, if I could relate a name to an event, then I was really good at that. And I was really good at remembering events and dates, but not people's names in social settings. It was terrible. It is still terrible to this day. I have to like write it down. Or it has to be a very impactful moment to me, like where that person has to really leave an impact on me, and I go, okay, I'm definitely remembering your name. But otherwise, it's really bad. All right, so back to your question. Yeah, so Andrew, lately I've had kind of coming to terms with even mentioning this person, because look, he's very questionable. All right, some of the things he's said are very questionable, and like I saw that. I know that a lot of you kind of joke around and watch him too, and you guys talk about it in the Discord too. But I think that the points he makes is when he's pointing out scammers. He's I think when I saw some of his stuff, he like rants that everything's a scam. He always says everything's part of the tribe or whatever, and he says that pretty much anything and everything that walks is pretty much a scam except for himself, which is the funny part. And well, that's the beginning of the funny part. Then there's the other stuff. Like there's a lot of claims that he has made, and no matter what you kind of ask, there's no substantive evidence that he provides. He always just does the threat that you have to do a bet of like $50,000 or whatever dollars. And then he actually blocked this channel when I wanted to take him up on the $10,000 bet, but he blocked me. Regarding anything else, you asked me a specific question on my thoughts on him, because I try not to, draw too much attention to this individual, because I am almost kind of worried that Well, I don't think the capital mindset community, but you know, you never know who watches this video, and then they go check him out, and they kind of like fall for it. He doesn't really need many to kind of fall for it. I must think he doesn't really like me. And I know some of you guys troll him about me, which I think is funny. But yeah, if you ask me a specific question, I'll be happy to answer it here in the chat. Or just like, because broadly speaking, it's like, I mean, what can I say about the dude? I mean, he's a funny guy. He's really funny. I'll say that. Capital Mindset, thoughts with Spotify? Can you explain the cost of music royalty for Spotify? I have no idea how the world music label works. Any good? I mean, I assume there's a lot of material on that, but so basically, simply put, when you listen to a song, well, actually, no. You see, the thing is, it depends on what studio they're making an agreement with, because some studios might make like it depends on the studio and what agreement they're making. It could be like one fee for the whole month, one fee for the whole year, or maybe a per listen basis. It really does depend, but it is costly. Okay, so that's the part that makes me a little bit skeptical on them. No joke. I've been vegan for years, and think TTCF is going to zero. They probably will. There's a high likelihood they can. They have a lot less ability, all right, to actually raise capital now, with their equity actually being down so much. Thoughts on AS? I think it's expensive. Oh, and he's probably gonna do well on that because I think it's expensive. Everyone does. For this one, everyone knows him. That'd be funny. Team Johnny and Team Amber. Totally not Amber. Come on. I sadly know about that. I didn't know about Amber Heard until that. Yeah. Johnny Sins is my idol. Mike said himself a scammer. He'll run out of people to call scammers. Yeah, probably. Oh, this one's another one. Thoughts on the potential for 5G and 5G chip making? I hear Qualcomm is great in the space. Yeah, Qualcomm is probably good. But Qualcomm's like the one that everyone points to, so it's like probably not going to have the greatest upside. Bill Ackman. Well, I keep clicking the wrong thing. I don't mean to do that. It's because the new comments come in. It pushes everything up. All right, so Bill Ackman. What are my thoughts on Bill Ackman? Mainly his investments and decision making. I mean, I think like all in all, he's kind of like a shady figure in the context. Like when we talked about it way back in the past, where he said on CNBC, and it's still out there, that you should sell these stocks, and he was buying those stocks. That was like, okay, man, wow. And then with his decision with Netflix, I think that one will turn out to be probably a mistake. But the thing is, when he was buying heavy, that was a mistake. So he did a double mistake. And as far as his other investments, I saw that he was buying railroads recently. I don't really follow Bill Ackman, to be honest, too much, unless you guys tell me like what he's been doing. But I think he's a questionable figure in terms of morality. Capital mindset. Oh, what was your currency question? My battery died. I thoroughly missed it. Chris, ask the question again. I didn't get to see it. Yeah, I'd probably say that Bill Ackman's probably, again, a questionable moral figure. So, all in all, I don't think that's okay. I mean, I think, like, if you're doing investing, you should probably, like, CNBC is, like, where you kind of go to advertise your book and try to raise capital and try to, just get your name out there. Oh, JP? I gotta be honest, Ross Gerber. And, like, my God, you're giving me, like, really hard decision there. Ross Gerber, probably. It's just, like, there was a part of me that believed that he was what he said he was until he said one particular thing. And then I was like, nah, there's no way. Like it was towards the beginning when I first found out about this guy. I thought he was kind of funny. And then like I was like, maybe like who is, kooky enough to do that? And me and my buddies, we were all like watching or reading through all of his stuff and finding all these things about him. It's so funny. He's been around for a very long time. He has all these like comments, of course, like that the media is like out to get him and stuff. Oh, I know what your reference is, the stripper king. I know what you mean. That's funny. but yeah, I know what you mean. So, all in all, I think like overall, what I'm basically doing is as money kind of flows in, and I'm getting it from both my investments and work. With work, it's actually been really nice because I've actually been able to build it out. And actually, Capital Mindset through my services that I provide, and not through YouTube, by the way. I provide extra services elsewhere. I've been actually building the Capital Mindset portfolio that I don't know if I should do like kind of a fun, 13F filing of sorts, but I don't know if I should do that. I did actually build out a Capital Mindset portfolio, and I did that so the bank doesn't actually charge me for anything. Because if you build a certain asset base with at least Bank of America, they give you like the status, and you can actually have an investment side of the business and have a actual investment account with them through a business. And I did that just to avoid the fees. So it should be I don't know if I end up deciding to do that, it should be fine. But yeah. And that's basically it. Because like what I do with Capital Mindset is because I created an LLC, I decided to do some services. Again, like I said, you guys don't see these services because they're not really, and they're not offered at all. But I do business under the name, and then I can actually, have those tax advantages, liability advantages, etc. Because if I have an LLC, why not just use it? And then like the YouTube is like nothing. YouTube's like chump change, guys. YouTube is like a grind. You gotta understand, like this is really if you're not making like Jeremy money, it's like a lot of like a passion project. And even then, there are a lot of types of work that you could do that scale even better than YouTube. But for YouTube, it's not bad. It's not bad. Okay. But it's more of like just a passion. You really have to be passionate about what it is you're doing. And I'm just like checking right now my work emails, making sure I didn't miss anything for today. Hold on. All right. And by the way, we are doing the interview tomorrow. I don't think he's canceled on me yet. Let's to hope that he's not canceling or moving it. But I think we're on for tomorrow. So for those of you who don't know, I am actually doing a quasi debate because I did an open invitation to any YouTuber that wanted to debate me on Tesla. And someone messaged Chris. You guys know who that is. Tom Nash messaged Chris, and so he's coming on to a debate, so to speak. Let's see here. More questions. Okay, so we did get more questions. Capital Mindset SPAC from the last 2 years. Do you think it dropped like a rock? Oh, what SPAC did I think would make it that dropped like a rock? The only one that I have. Like BurgerFi, but I have it for fun. It's like nothing. I put the spare change, as I say. MP, I have no idea why this application hates. Oh no, now it's showing you. Before it wasn't showing you. Now it's showing you. Okay, so you said you would horn stuff. No. Okay, so Capital Mindset. How has Kathy Wood's ETFs not gone bankrupt with her insane picks? How much money do you think people give her to waste? I don't know. People are crazy, man. Literally, people are crazy. They will give money to just about anyone who's a good salesman. That's why I say, and I told you guys this in the last live stream. I feel like I'm at liberty to say this. I have no incentive to say otherwise because I don't want your assets. But the asset management business is a sly business. It's a lot of like sales pitching, trying to tell you they have great performance in the past, fudging the numbers around. and a lot of, buzzwords, a lot of talking, saying, this is the future, this is the excitement. They got to get you excited. They got to convince you to give them their money or your money. Your hard-earned money has to go to them, and so that they can manage it and generate fees, and that's their incentive at the end of the day. They don't really care necessarily if they do good by you or bad by you. They just care that they can collect their fees, and that's basically it. I just saw a question about financial advisors. I have to say yes, because one of my very close friends is a financial advisor, and if he's watching, he would be like very disappointed if I said otherwise. But I'd say that my honest opinion is it depends on the financial advisor. So if you have a financial advisor, easier said than done, that is doing good by you, that actually cares about you. Yes, I like financial advisors because the majority of people are probably not going to understand what the heck is going on, especially, sometimes markets can be intimidating, and a financial advisor is hopefully the one that you're dealing with, understanding of your specific situation, and can kind of manage your ups and downs, understand what it is your needs are, your goals, and help you out, right? So, but easier said than done. So, just scrolling through. Thoughts on T Rowe, zero debt, good dividend. T Rowe price? Oh no, it's almost done. Yeah, T Rowe price. I mean, it's another asset manager. I just don't really like asset managers too much personally. I like Brookfield, and that's about it. But in a low yield environment or a higher yield environment, something like Brookfield might suffer, but T Rowe, it really does depend. I'd have to really look into it to kind of come up with that. I'll answer that question, Zeus. I just saw that. Thoughts on T Rowe Strongman? Strongman does not. Yeah, so because I think in a broadly speaking, yeah, I wouldn't like them, because the thing is, if you're already the Boglehead investment strategy can work for everyone. Index funds, and that's about it. You just buy the index, and then you just chill, and then that's really, you don't need anyone to tell you that, right? That's easy. It's so accessible. There's so many different ways for you to get exposure to that. Oh, and I just saw this one can be overtaken within the next. Yeah, I actually do think that there's a lot of guys coming after them. Fake alias. So when you have high margins like that, everyone wants a piece of the pie. High margins then tend to attract innovation or competition. Someone's going to try to take your pile. So let's see here. Fabio. I guess I'd have to say the Miami Dolphins, because one of my friends will kill me if I say otherwise. Oh, I think I just answered that, Zeus. What do you think about synthetic short strategy? Nah, too complicated. In investing, you don't have to be too complicated. Capital mindset, advice on picking up Brazilian women. I don't know, man. What makes you think I picked her up and she didn't pick me up? I'm just kidding. But in seriousness, I don't know. They're just like other women. They're a little bit more sassy, if you can handle that. If you have certain preferences. Capital mindset, there are only two people that can manage money, Chris Sane or Stockmo. Why would you do that to me? See, oh my God. You know what? Has Stockmo ever shorted a stock? Because then I'll just go with Stockmo. Like, you're literally telling me two options, like, oh, you want to jump off of the building or do you want to shoot yourself? All right. I don't know, man. Like, yeah, I'd probably say one or the other. Apparently there was a question. I'm trying to find it now. Someone asked if my services are legal. I don't see that. I'm just getting the text message that someone asked that. Specifically, like, what services? Like, my services that I'm referring to? Yeah, they're perfectly legal. It's just like I'm not just like cross or talking about it, right? But it's perfectly legal. It's nothing like shady. But yeah. Services. When I say services, it could be anything. It's just I'm doing services under a business name. That's it. Fabio, where are you getting? Oh yeah. So I was going to answer this question. Where is it? Fabio, why are you getting a house? Because, if rates rise up and they kind of crush demand, if you have a lot of cash or you have enough cash and you're generating good cash pile, you could be getting good rates. I'm not saying, I'm going to leverage up to the tits, right? Using some Wall Street bets lingo. But it's going to provide better and better opportunities. That's the thesis. I think, I've been saying since about Wells Fargo's report, 6 months to a year. 6 months to a year is when I want to be prepared for that moment to happen. I theorize that that's about when it's going to happen, where I'm going to be able to find some good deals. The thing is, probably where I live, it's going to be terrible because, gosh darn it, people are crazy, right? People are just wanting to live where I live. And they're going to buy up all the houses. So, yeah, sucks. Too many people trying to move here. Did it start in Texas? And you guys are talking about something else. Capital Mindset, advice on balancing 3 wives like yourself. It's not gonna work. You're gonna die. They're gonna kill you. Telling you. Brooklyn Stock Shop or Ape Father. Oh my gosh. Why are you picking like the worst people? This is terrible. Yeah, I can see your comments, by the way. Sky Alert, I can see them. I'm trying to think. Jeez. A Father. I don't know. I don't know who'd be better. Both of them are terrible. Sky Alert, what he meant. Thoughts on Stranger Things? Like it. What's the maximum mortgage rate I'd get? Well, the thing is, if the mortgage rate goes higher, the less I'd be willing to pay for a house. That's how I'd work. It's all about that payment. Oh, JP, Buffett, 100%. Buffett, because we agree on one thing: no Chinese stocks. Where do you live? Quadrant of the U.S. at least. East Coast. Thoughts on stream? Yeah, I said I like it. When you have multiple accounts, I have a Roth. I'm trying to get to this one. When you have multiple accounts, I have a taxable Roth IRA, HSA for. Oh, good for you for the HSA. HSA, a lot of people don't have that. Considering asset allocation, do you combine them? So for me personally, I have the taxable will probably be like the last thing. The HSA is awesome because it's tax beneficial in both fronts. 401ks are matching that will depend on my answer, and the Roth IRA is as long as I can get money in there. I'm gonna have to do a backdoor conversion because there are limitations on the Roth, so I have to do a backdoor conversion, which sucks. But that's how it have to be because But yeah, I love the HSA. HSA is awesome. Thoughts on Better Call Saul? Love Better Call Saul. I saw a couple episodes. I'm trying to get my wife into it, but yeah. Julius Caesar. Oh no. Advice on cosplay girls. I don't know about that. Capital Mindset. Jeremy or Diamond Hands? Jeremy, 100%, because Jeremy's had some good ones at least. Lufufu or BP? Well, I don't know. BP hasn't said anything in terms of like what he'd be investing in, so I wouldn't make that judgment. So then I'd just say Lufufu, I guess. BP on that one. BP on that one. I love how he's like such a well-known person now. Capital Mindset. Honest question. Do you ever branch into day trading or swing trading? Yeah, swing trading. Day trading, no. Day trading would be just like by accident. Like, oh, I changed my mind. But like swing trading, I'll do that here and there. Like, but like, again, it's like always never not on purpose. I don't really like put, that much concentration on that. It's mainly like, okay, I like that company then, I don't like it now, and I'm out. I love that. I love that joke. He predicted. What are my thoughts on uranium's future? Let me actually drag this one out. Oh, yeah, I see what you're saying. Skylarts, I don't know why, but sometimes, I guess for some people, it doesn't show your comment. Okay, so I see your comment there. I don't see it here. Weird. So I see your comment here. What are your thoughts on uranium future? Oh, sorry. Yeah, uranium's future. Uranium has a bright future if everyone moves to nuclear, which I think we should, and to some degree. I think nuclear should be the focus and not, just destroying our oil and gas. I think we should actually focus more productively on kind of what are the energy sources that can provide us with absolute stupid amounts of energy. I think that's important. All right, we see here. All right, I see this question. Formula One. You guys are getting to like know me. This is like how get to know Capital Mindset and his likes. Capital Mindset. I live in NYC. Do you think it's economically responsible to live in places like California, NY? If you're trying to build a net, yeah, no, it's not. It's not responsible, man. I mean, like I'll say this. I went to California. I mean, sorry, not California. New York recently with my wife, and I was actually really surprised how I guess expensive food got where I live. That I thought food was cheap in New York. My wife tells me that's always been the case, and I don't remember it like that, but food's like really cheap in New York. I mean, you can find a place to spend a lot, but like it's like I think it's just more expensive where I'm at. I mean, it feels more expensive. I notice it. It's like you don't really save much at all, and then there's a lot of like little niche places. I think it's because of the tourism tax, you could say, that we're paying over here, but yeah. The degenerate within me has absolutely wanted to do that when I was younger. Not anymore. I don't get that urge. Update thoughts on Warner Bros. Discovery debt strategy. I think that they should focus mainly on paying down debt, but they want to spend a lot on content. I just hope they spend it well. Please hope they spend it well. But yeah, thoughts on Jon Snow spinoff. Look, I don't trust them with Game of Thrones anymore. You know, they messed it up. They messed it up terribly. No one can convince me otherwise. Mullet or mohawk? Mohawk. I wouldn't look good on a mullet, I guess. Both are kind of weird on me. But yeah, going back to that other question on New York. If you live in New York and you can work from home, why would you do that? Because everything else is so expensive. Everything else is crazy. There's so much other places to kind of visit. I don't even think New York. New York's fun, but like I'd visit New York. I don't want to live in New York. Also, in New York, you have to deal with so much uncertainty. Like you're walking around. I don't know. I don't feel and at least like when last time I was in the Times Square area, you don't feel safe at night in some places. And this is still Manhattan, so it's like, right? It's they need to fix that, right? But anyways. Okay, so so for the course part, I think for the course part is the thing is I want to release something that's good. But at the same time, I have to balance out all the work that I do. So it is going to take some time. It is going to take some time. I'm going to be honest about it. It's going to take some time. And on top of that, right now, I am juggling because I have to pass all 4 exams of the CPA by this year for my next employer. They require it for me to get that all done really soon. And so that's a bit that I'm juggling. All this together, working, capital mindset, regular videos, I mean. So it's going at a snail's pace, but I'm trying to do it with in conjunction with, you remember investing with Cole. And so he's going to be like the quote unquote, the student. And then I basically just film it and then give it to you guys. Cole or Diamond Hands? Cole, 100%, because he just put me in an index fund. It's pretty good, man. It's like an island. That's all I'd say. It's like an island. I'd totally live in Puerto Rico one day, but yeah. Personally, that'd be the weirdest thing. Because well, maybe if we're like really big one day, we'd do it for fun. Spinoff. I have no idea. Capital mindset. Damn, you're taking the CPA. About to take FAR in 2 weeks, and nervous as hell. So I'm doing it with the firm. They did this acceleration program where they're working on us to getting the CPA really quickly. So we're doing it with them. Not like at their facility or anything like that, but like they're gonna be bringing in like teachers for us, and I'm gonna be taking FAR and Reg with them, and I'm gonna be doing audit on my own. So I'm studying audit pretty much daily, and audit's pretty easy, but it's just boring. It's just so boring. So that's just my personal opinion. But yeah, FAR, for anyone who doesn't know, is considered to be the hardest exam. FAR I'm going to be taking. That's why I'm taking it with them. So it's going to be 8-hour sessions every day, which is awesome because they actually are going to be paying me for it. So I still get paid to actually just study, which is nice. But yeah. All right. So let me see some more questions. I haven't actually. I can't answer that question right now because I have to actually look, because I'm not a tax lawyer and I haven't studied specific. I don't focus on taxes, but I have like a general understanding or a good enough understanding. So I wouldn't be comfortable with answering that question right now. But if you had asked me when I was fresh out of corporate tax class, I probably could have answered that immediately. But it's been a while. There's like, you're asking why they're able to, right? Or how do companies manage to defer it? I can't answer that right now. I'll be a certified CPA accountant, technically, yes. You got it. That's funny. That's funny. Thoughts on Dexter? It's Dexter. Dexter. I don't know what Dexter means. CCPA, bullish on China, absolutely. No. I mean the exam, JP. The exam is like the material, man. It's just all a bunch of like rules and regulations, and what to do when this happens. What do you report when this happens? What do you attach to this report? Oh, it's so boring. I mean, like, if you're working on something, like, okay, it'll be probably like fun, but like, when you're learning the rules, man, oh, it's. I mean, it's easy. It's not like a bad. I think this is the second easiest exam, and then the first easiest exam is business, which is, it's just like doing MPV functions and stuff. Yeah, I know this is the funniest thing. All right, this is the funniest thing. Lafufu, yeah, he did say that. That was funny. And I got a question about. Okay, Dexter. You're talking about the show. Yeah, I like Dexter. Tom Nash debate all about valuation. What about his incomplete full self-driving government regulation against removing drivers as workers, and the robot that's all hype and no real? Yeah, exactly. It's about all of it. So because all that's connected to the valuation, right? It's not separate. You can't separate that. So, yeah. Capital mindset. I'm an auditor. Dang, knife in my back. No. Like, guys, I'm saying not the audit itself. The audit exam. The audit exam it's it's the audit exam. Okay, I know you guys are joking at this point, but like, it's the audit exam. it's I think FAR is more interesting to me, because I did study FAR ahead of time, because I didn't know that they were putting into that program thing. So I was studying FAR, and I was like, oh, okay, so far I got the groove of this. I remember this from all my accounting classes, intermediate 1 and 2. This is fine. But then, he hates us, Dan. No, I don't hate you guys. I don't hate audit. I hate the audit exam. But you guys know. You guys are totally just trolling me. So, well, we'll see how that goes. It's tomorrow at like 2:30. It's at 2:30 p.m. If anything changes, you guys will see it. Unfortunately, if anything changes, you'll see it. Hi, one of my friends has CFA level 3 with 2 years of work, master's in finance. How much can they get paid for an analyst role? Planning to move to the U.S. Could you discuss salaries and bonus average? All right, so for an analyst role, well, it depends where he'll work. where he'll work, as in geography and company, but it could be, he could get one that lands starting 6 figures, and he could get one starting with less. It just depends. A lot of people like to think that you go to New York because you get paid a lot more, but then you also have to pay a lot to live. It's like give or take. But yeah, you have to take government account. So actually, they actually removed that class now as a requirement, or not as a requirement. They're replacing that now with data analytics. So because I think that's actually more important. It's a she, boys. All right. So thoughts. What are your thoughts on the popular investor's approach? I mean, I think his approach is it's fair. Everyone is entitled to their opinion, their own approach. It's not my approach, but I don't see anything crazy wrong with it where I'd say, he's a complete abject failure, like anything strong. I don't have any strong opinions to the contrary of his approach. I think that for me personally, I just would not think that the assets he considers to be core assets would be core assets for me. They'd be more on the speculative side. And yeah, you see, Andrew Austin, what you just said, just get a remote job and live where it's cheap. That's what I would say. I'd prefer that over anything. And my wife has that going for her. So, and then on top of that, you can if you live somewhere where it's cheap, you can save more, focus on building your wealth, saving more money, enjoying life a little bit more. All those things are nice. And if you're ever planning to have a family, you can stay home, take care of the kids. Because that's what we're planning on doing, where basically we can both, take turns taking care of the kids. We don't want someone else raising our kid. We don't want to send them to daycare. We want to, be there for them in every step of the way. Capital Mindset, do you think it's a bad idea to I have 17% of my overall and look, for me, I wouldn't do that. For me, but you are a different person. You might look at Alibaba and look at the risks that I say, and you might not even care about those risks, right? You might say those risks are, they're not, that's not a big deal, right? So you have to think about it for yourself in that regard. But because I can't tell you, oh, you should do this, right? No. But yeah, I hope that helps, right? You see, working remote, it's amazing. I think Strongman just got a remote job because he's going to start working remote too. And I think that's the superior way. I mean, we talked about, with Elon Musk and what he's doing in terms of trying to get people to maybe quit because he's saying you can't work remote anymore. But yeah. All right. Does anyone have any further questions for me? Could be about anything. Oh, data analyst. I can see your question, Skylarts. But what is it about tractors? I can see it. I can see your comments, I'm saying. Because I'm looking over here. And it's actually pulling it up here, too. So I see it on both. Thoughts on POGs? POGs are good. Shake Shack or BurgerFi? Depends on the burger, but Shake Shack's pretty freaking good. Fabio, legendary troll at the same time as Tom Nash debate. You get Brooklyn on the stream, get him rallied up, and then when Tom joins, oh my gosh, that is so funny, and I have no idea why it didn't show up on the software. I would have missed this comment if I wasn't looking over here. This software technology, love it and hate it. Yeah, actually, Deer and TSCO are already actually on there. Yeah, they're already on the list. When you're doing covered calls, do you have a specific delta you prefer if you want to try to keep your shares but generate a little extra return? Obviously, I only see calls if you can. And then this question. I think was it you who asked the question in the comments section? Because I did already get this question too. Or was it in the Discord? I forget. I answered a question exactly like this. But basically, for me personally, it's actually simpler than that, right? So I look I only do covered calls when I have a position that I'm already in the green in, and I'm already satisfied with selling if I were to sell right then and there. So, and then from there, yeah, it gets a little more common. But that basically start from there. I don't even think about it unless we're in that position, or if I'm in that position. And I have to be satisfied with the fact that it could be sold, right? And I'm happy with the strike price at which it could be sold. All right. So I hope that helps with that question. Okay, what is this? Why is a backdoor Roth not good? Well, it's. I think you're maybe asking from a tax standpoint because I'll have to pay the one-time tax for the transference. But I'd say, I mean, you wouldn't do it unless you're forced to, and there's reasons why you'd be forced. So you can look up into the restrictions of the Roth IRA. But there's restrictions on it, unfortunately. Have you ever tried to reach out to Jeremy to debate? No, I haven't. I've never tried. I've never reached out to anyone to debate, except for I think the Carson fellow, because I didn't have necessarily a context for anyone to know what a debate would even be like on capital mindset, and so I saw that he had a differing opinion to me. And I wanted to bring someone out who had an opinion, and he's obviously brave enough to make content and share his opinion. So he would come on the show and talk about his opinion on the stock. And in this instance, again, it was an open invitation. And then Tom Nash was the one who asked Chris if he could come on and debate me. And so he's going to come on and debate me. I wouldn't like go out of my way to ask, but if Jeremy messaged me and he wanted to be on this show and debate me, he's more than welcome. Anyone's more than welcome. I don't really mind. So there's no concept. 9 to 5 tech companies have, yeah. It's very stressful. Yeah, it is. I know. Good finance YouTube recommendation. I got to be honest. I don't really watch a lot of YouTube. So, well, except for like, I love watching interviews. Like I'm all about like just watching interviews. I watch interviews all day, every day. My wife understands that. She's like, oh my gosh, you're always watching these YouTube interviews, all these interviews. But you're talking about like finance YouTubers. It's such a weird, it's so cringe to say that when it comes out of my mouth. Finance YouTuber. What do you do for a living? I'm a finance YouTuber. Ugh. What are you? A finance YouTuber. What the hell is that? Like, I don't know. For me, it's weird, even though it's like technically what I am now. But like, right? But I don't know why it's so weird for me to say finance YouTuber. I think Hamish Hodder. It's pretty good. I think I'd be like a dick for not saying it, but like the Popular Investor, the crew that I also, the crew that I always go with, all of them, they're genuine, they're wholesome. But yeah, I like to more think about from the perspective of, is the person you're listening to like trying to do what's best or do what they think is best. I don't know. Or what thoughts on Disney as a long-term investment? I mean, could do well. It's come down so much. But the thing is, I just don't like how Disney manages themselves sometimes, man. It's like, what are you doing? What is the best investment strategy for foreign investors in U.S. markets? What is the best investment strategy for foreign investors in U.S. markets? We do not need to worry about U.S. taxes. Nah, it's tough. So you don't buy dividend stocks. That's one, because, well, I mean, the thing is, you probably can write off the dividend taxation or the withholding tax in your home country. You probably have a write-off. Like, we can do that here. So, like, when Canada takes away the dividends I get from Magna International, I just write that off, right? So it's like, okay, whatever. Just gets written off. I don't know if we have an agreement if I put them in my retirement account that they don't get that withholding tax, because sometimes we do have agreements with certain countries, and you have to see whether or not you're a specific country has that agreement or not. Can you explain your auxiliary versus core? Simply auxiliary just means it's a supporting position, so it's not it's not. It has a purpose, as in it serves like a particular bet in something, right? So I'll give an example, like Thor Industries. Thor Industries is an auxiliary position, and it's like a bet that I'm wrong that the consumer is going to do good. The consumer does great, appetite's great, spending is great, all that continues to do great. Thor could do great, right? And Thor at a certain price is going to do great no matter what, because the price is going to be too low. But I have other positions that serve other purposes. So I had ancillary positions in the mining sector that served their purpose and then I already took profits. Also, I don't know if you guys, for anyone who's new, the portfolio is already updated for the 16th. It hasn't updated for the positions I bought today. That probably will update next week. But surprise, I don't really like go crazy in new changes, very rarely. So I just bought like Netflix and Bank of America and a couple other ones I mentioned earlier. But for those of you who are just coming into the stream, that's basically it. You like the Brazilian background, I see. Yeah, so this is the home city of my wife. She was born in Rio de Janeiro. Oh yeah, investing sucks as well. Going back to that question of other finance YouTubers, he posts very spaced out, and he focuses a lot in Canada. So if you're curious on Canadian companies, I'd check him out. He does a lot of work into his videos, and so he actually spaces it out a lot because he'll do a lot of time and dedication to that video, and he'll say, okay, here's the analysis on that video. So you'll get less videos per week. I think it's like maybe one per week or maybe one every 2 weeks, but when you get them, they're good. Let me see through this. Okay, so we have a comment on the plain bagel. I mean, the thing is with the plain bagel, he's way too big. I mean, I would talk to him, but he's way too big for me right now because, also they have to consider the time value. If you guys reach out to them and then they want to do it and then they reach out to me, that's probably. But me reaching out to them, you know how many times they get requests, right? So usually you have to either they reach out to you and they make the proposal, or you're just like another one of the spam that's just reaching out and going whatever. And for me, it's not really like a big deal or anything like that. I'm perfectly content with how Capital Mindset's going. Capital Mindset is the community that's just building slowly but surely, and I like to do that. Curate. I like curation, quality over quantity, and having conversations with people who we can both provide value to each other, because in a lot of conversations I have actually with you guys, there's a lot of value, and I like that. So it's like I don't have to post crazy things about the same stock or Tesla all the time to get the growth going, right? I don't really care. But obviously that's the strategy. That's the strategy that works. Or crypto. Crypto's the one that really works. I don't know why. Crypto really works. Chris, you were asking, do I like JP Morgan stock? I like all the primary dealers. I think Buffett is right. Okay. And I haven't talked about this a lot, but I do think Buffett is right. Let me see if I can actually, come on, come up. Where are you? Yeah, I'm trying to find, because I'm a little bit stubborn. Let me set it up, because I think that having the whiteboard's awesome. So let me actually cancel it and stop it. Okay, let's do that. All right, cool. We're back on. But yeah, I like JP Morgan. I like Bank of America. Citigroup's cool too. Citigroup's the highest risk of those guys that I just mentioned. My favorite is Bank of America, but JP Morgan's good. JP Morgan's like the bellwether of the banking sector. They're always going to be good, so to speak, but I did quotations for no reason. Any good Brazilian stocks? Zuni, the thing with Brazil is you got to be very careful, especially with their elections coming out, that you might actually get a Lula victory. If you get a Lula victory, I don't know what's going to happen. I don't think it's going to like absolutely collapse the country, but who knows? You got to be careful with their policies. And I got a question about Align Technologies. What price would I add to Align? When I looked at Align Technologies, I did like it. Wait, what? Wait, I just saw this. Every finance YouTuber is bald except for Fabio. Are they? There are a lot of bald ones, actually. But yeah. So. Oh, thank you, Stefan. I just saw this. Thank you. That makes me feel good. I'm trying to find. I don't know if it shows it here. Yeah, it doesn't show. I don't know why it does that. All right, so Michael, I see your comment here. It doesn't show up here, so I can't bring it up. But the thing with Align is there's just been so many other things going on that I really haven't gotten to it. I got to reevaluate it and see if I like it, because when I talked about it, I said I'd probably start a position. I just didn't get to it. And I talked about that in the video, that I might not get to it. And so, yeah, I just didn't get to it. But I like the company. It blows Smile Direct Club out of the water. Let's just start with that. Ricky, has to be Portuguese women, because I'm married to a Brazilian, so has to be. There's no other way around it. I got a question. Is my channel monetized? Yes, it is monetized. Because investing is stressful. Oh, yeah. These banks, they have terrible investing apps. I don't know why. But honestly, with and Zeus Devo is absolutely correct. If you just do a dollar cost average strategy into index funds, you shouldn't be stressed too much. What, JP? What was your question? Oh, I see it here. Wait, where is it? Which one? Okay, so one of them, it didn't show up here. Is it this one? What is it going to take for you to get a position in Rick on the spec side? All right. Tell you what, I'll do it. I'll add Rick. Rick will be added. Rick has to be added. Plain bagel clapping cheeks. That's what I just saw. Oh my gosh. Yeah. Oh my gosh. Is my refrigerator running? That's funny. What Europe, Asia, and America market share do you think Netflix will get in 2032? So for streaming market share, are you talking about household quantity? I think that their original estimations for, I think, what was it, like 400 million people. I think that's still doable. I think that's doable, but depending on the price point that you can get that amount at, I think that Netflix can get there, especially if they offer cheaper platforms and even maybe a freemium version, or not a freemium version. If they get to a freemium model, they can probably get there, and then they can generate ad rates. But I think that Netflix has a very high probability of getting to the top, if not one of the top, let's say top two, among the top two streaming platforms in the entire world. That's where I think Netflix will end up. And then I think a close second could end up being Disney Plus or Warner Bros. Discovery. Or, you know what, Apple's producing some good stuff, man. I don't really know. But I know that Netflix, I really have a hunch Netflix is going to get into the top two. That's my bet. But yeah. Zeus, the courses, I'm working on it, man. It's tough with everything going on. Like I said, I'm studying for myself in my own course, I guess, for the CPA, which is pretty much a daily thing, because the exams are going to almost be back to back to back. In reality, I'm supposed to be done with most of them by September is when I'm supposed to be done with all of them. But I'm trying to get the last one done in September. So then, because of that, it's a lot of studying that's going on. AIR9. I did not talk about Autodesk yet, but in the context of Autodesk, I'd say a lot of these B2B solutions, I'd be a little bit cautious. Well, not cautious on, but they're all getting interesting actually. But with Autodesk, let me see how much they're down, because I'm pretty sure they are 80SK. Let's actually pull them up. Autodesk. Okay, so Autodesk is at 167. We'll pull up the desktop here, and they are far down now. Wow. I remember this thing, high flyer. Everyone's like, oh my gosh, Autodesk. So gap P ratio of 76. looks expensive. Just kidding, but I think when I looked at this one recently, it's all about guidance, and guidance was not really very good, or at least up to snuff with what investors are asking for it in this market. So I can do a video on it. And their software is probably very sticky, but that doesn't necessarily mean that they're trading at the right valuation, because they could just be trading for a crazy price in which so much is being priced in. So it's the price per perfection thing. Remember when we talk about Tesla, it was priced for perfection. We talked about this a lot. So if anything goes bad, you really do have to pay attention to that. It makes it almost investing even more stressful, because you don't have that margin of safety. Implicit in a built-in margin of safety is, let me kind of try to, let's have a go at trying to create a visual on this. But let's say, if the intrinsic value is here, like let's say you calculate it to be there. And let's draw like a little bar graph. There we go. There we go. And you know what? Because I want to make it perfect, we're going to do that. All right, so that's the intrinsic value. And let's say you've calculated it to be, I don't know, like whatever stock, $50, right? And so if you buy it at $49, right, you bought it right there, you don't have any margin of safety, right? So anything goes wrong, you're going to be underwater, basically. But again, this is easier said than done. I'm really oversimplifying it, but in theory, what we want to be doing is getting that nice margin of safety on that future price. So let's say whatever, this is like $25. And extreme, this is extreme, but so that implicit margin of safety, what you're basically getting with this is obviously the ability for more to go wrong. And so in reality, another way you can think about it is, you don't necessarily have to be correct in all assumptions for you to, be okay, right? Because you have that built-in margin of safety. Again, this is the theory, the academic theory behind this, okay? So with something like Tesla, where you're basically pricing in all that growth, the robots, the autonomous driving, what do you have to do? Well, when you invest in Tesla, you have to, no matter what, be paying attention constantly to what the company is doing. You have to always be like, okay, are they executing? If they're not executing, you're sweating bullets, because then you're going to be underwater, right? You don't know when it would recover, because how much is the market priced in? You have no idea, right? So, but you can kind of tell when something is priced to perfection, because all you're doing is making assumptions. Oh, and that's the other thing, because you might have that question like, okay, but how do I know if something is priced to perfection? Well, if you're at this valuation, right? Oh, because there's, and I'm going to actually get more into the crux of this, because this is actually important. All right, let's get back to our example here. So if this future valuation is based off of business lines that do not exist, right? Such as, for example, like Tesla, we say Tesla is worth this, I don't know, what do they say? It's like 8 trillion, right? It's worth this 8 trillion. Why is it worth this 8 trillion? Because robots, right? Taxi network. What's another one they say? Cars, you can say whatever, but energy, insurance, right? So they say all these things, but here's the thing. This does not exist. This does not exist. This is kind of there, but it's really small, so I'll just put like a little circle. This is also there, but it's still kind of small, so a little circle there. Car, all right, so you have that business. It's different when you make an estimation on this, because this exists, so I'll put a check mark there. What else exists? Solar panels, I guess. Like, I'll lump that in with energy, so I'll do a little check mark here. A little check mark there. So they basically have this, so you can make estimations on this pretty reasonably. But when you're priced to perfection, is basically, well, your price on this, that does not exist, that does not exist, or businesses that are really small right now that are just potential or full of potential. And when you have something that is, I guess arguably analysts are pretty good at estimating the market value or something like that, that's even then, it's easier, but like, come on, man, like, are they going to conquer the car world? I don't know. You have to be pretty confident anyway, but you could even be priced for perfection here. But you really have to know that you are priced for perfection when you're priced on assets or business lines that do not exist. All right. I think I made my point. Does the visualization help? But yes. If you guys have ever seen the meme like, oh, this gender does not exist. The gender does not exist. That's kind of what that reminded me when I was doing that. But yes. That's pretty much the visualization. If that helped, good. If that didn't help, I apologize that I suck so much at visualizations. I tried. All right, let me delete it here because I like to have it clean. Delete. Oh, here. Okay, so what stock are you the most bullish on and why? Oh, Tanner, you just asked the question. Oh, and I just saw another, not a question, a comment. Absolutely would be amazing to get this. Okay. Wait. There's other questions here that I want to skip by accident. Let me see if did it not show you up here? Oh yeah, no, it did. Here it is. Okay, boom. So Capital Mindset, thoughts on the Spotify Investors Day. As a user, I'm happy they're getting into audio. Yes, I am too. Absolutely. Would you ever do a video on SPOT? Yes, I would. I'll try to do it sooner rather than later because I think the price now is absolutely collapsed versus the time when I told you guys I was like actually interested in the company. Yeah, it was like $150. Now it's like $100. So I have to really take a look at it. I remember that Galileo guy who like was all about Tesla. He's like, this is I think his second biggest investment, and Block is his other biggest investment. But yeah. Capital Mindset, do you think my stick? No, yeah. Definitely go to 69. That's financial advice. Take it to the grave. Why is Buffett indicator good or not? Why is the Buffett indicator good or not? Oh, not good. So you're talking about the Schiller's PE. Save that for a video. Because we'll get on a tirade about it. We'll save that for a video. I will make that video. That will be that's actually up next for the macro video because I mentioned it in the index video and I don't want to spoil it here. Okay, but it has some minor issues. Some people that don't think about it. I actually have talked about it in Strongman's live streams, but. Let's see here. Okay, so what stock am I most bullish on and why? Okay, so let's separate the question in a couple parts. As a business, the company I'm most bullish on as a business is Google. Okay, Google has so much ahead of it in terms of what it has as an ability and flexibility. So like if I take us back to the whiteboard, what I see in Google. Well, Google has this massive, absolutely gargantuan cash pile. Oh, don't mean to do that. So they have cash, right? So they have cash. They have advertising. So ads. They have. Then I'm talking about advertising on Google. I should have been more specific. They also have YouTube, and they have my fourth and final favorite business of theirs. Wow, that's like an oval cloud, right? And on top of there, somewhere around here, they have these like offshore bets, right? I'll just call it bets. All right, so these over here, they can be huge one day, but this is like a cash cow. This just makes this bigger. And with this, they can help grow this, or they can go over here, or they can invest more in this. This vertical is, we don't really have to talk about YouTube, right? We're on YouTube. They're already dominating pretty much everything. I think it's them and Netflix dominate media right now, according to the data. It's just them and Netflix and Facebook. And as far as everything else, this cash pile also kind of gives them flexibility in terms of how they want to, return capital to shareholders, so they can perform buybacks over time. But they don't really need anything. Like there's debt is non-existent. I think debt's like $12 billion versus their over $100 billion in cash. it's a business that has so much optionality, and the cloud business is smaller than the other two, the other big boys, which is Microsoft and Amazon. However, Amazon and Google are moving both in the same direction, while Azure is actually taking like a little sidestep over here and not doing some certain investments that I'm kind of not happy that they're not doing it. But I think Microsoft will still do fine. It's very competitive, and you also have Oracle coming in too, but not coming in, they've been in the space. But everyone who has a cloud business, a successful cloud business, I'm bullish on the cloud, basically. I'm bullish on the cloud. I just think of the big three, Google has so much optionality. It's not even funny. Now, they are going to be heavily exposed to the broader economy, the health of the economy. This is where you can get a little bit of weakness in the short term. So if you're thinking of Google, saying, I'm going to buy Google tomorrow and it's not going to go any lower, think again, because absolutely it can go lower, because when you consider the fact that Google is so dependent on that ads business, it's actually the majority of their income comes from ads, then, what's going to happen during a slowdown? Ads are going to come down. And then so that's going to draw down their actual bottom line. So just keep that in mind. But yeah, that's the company I'm most bullish on. What about the Boring Company? Tunnels got a bull case. Yeah. Oh yeah, I forgot about the Boring Company. Oh yeah, the Tesla batteries business. But yeah, true. But I made my point clear, right? It's when you have so much priced in, you got to almost pay attention constantly to the company, and it can be stressful, right? So, Goog my boog. Polaris selling puts $65 and $70 PII. Have you taken a peek? I haven't looked at Polaris, but Polaris was one of those that did benefit from the stay-at-home trade. Everyone's going to be buying these recreational stuff. So, do you think Google is a monopoly? Great company, but they should be broken up. I don't necessarily think they're the monopoly in what people kind of assume to be something that, I don't know, is like harmful per se, because they offer a free service, and which makes it really hard to do a traditional judgment on that, because when I look at what government was intended to do in terms of monopoly was to protect the consumer. But if what they're trying to do at the end is just break up something that is offering the consumer the choice, and all the choices points to using that product, I don't know. It's a tough call, man. It's a tough call. I don't really think. Usually what happens when the breakups is you make the shareholders wealthier. So why not? That's what happened to Rockefeller. They broke up Standard Oil. Rockefeller became even richer. But yeah, because the market will bid up the sum of the parts more than the entity as a whole. So maybe they do that, and then all the shareholders are wealthier. You're not going to stop them from colluding with one another. Like, I don't know what it's going to accomplish per se. Like, what would the goal or the accomplishment of splitting them up be, in theory, right? Oh, now they're separate entities. They have the same owners. Wow. They're just like, they just have different management teams. Maybe the management teams can fight. I don't know. That's maybe what we can go for, that management teams are just going to fight each other. So it's not like a natural spin-off. It'll be kind of a forced spin-off. No, you're not crazy. I mean, go back to the Google video. I have Google, right? And what did I say in the Google video? It was overvalued. That was my personal opinion. So I hope that kind of shows. I'm not going to like pump my stocks. I'm not going to be like, oh, the stock's amazing. No, I'll say when my stock's overvalued. I'm not selling it, but like I can tell you, I thought it was overvalued. Another monopoly concern is more over control of information, not financial necessarily. Yeah, I know, but like everyone's choosing to use Google. Like that's the thing. I don't know. It's weird. Because we could all just use DuckDuckGo. Why don't we? Why don't we just use that? All right. Now, if Google is like saying, we're going to use our power or our thing to just squash all these businesses and then, do it ourselves, like objectively, like we can see that, we can measure that. Yeah. You could argue that Apple's doing that because they're not allowing other companies to take your data, because they're just like using the power of their platform. But we agree with them on that, but we disagree with them on other things. See how it can kind of get weird, the discussion. But because some people say Apple's a monopoly because of the iPhone, right? But it's like it's their network. So it's same like with Google and Android. Google is doing things to increase privacy, and people say they're crying monopoly. You can't do that because it's destroying my business. Of course they're going to say that, right? And then the consumer might be on their side with that, and then I don't really know why the consumer's not on their side with other things. Like I want to know the argument for like the information side. I don't know what Google does with your information that's malicious necessarily. And if we do believe that, we can just like, again, like not use Google. We can just use like someone else. Now the real fun parts about monopolies is when they usurp the government control. I love those ones, right? Those are the ones that are really awesome, especially when they do so with the backing of the people too. And that's when you can like really make some money because you make it their idea, and that's the awesome part. So great explanation, thanks. And most bullish on Palantir. At these prices, I feel like the upside potential is massive. Yeah, I think Palantir is now below what I ever originally bought it for. By the way, anyone knew, once upon a time I owned Palantir as a spec, and it turned out amazing. There's a video on it, but what is this? All right, so I'm gonna have to cut the stream, by the way, guys. So, but yes, because I'm gonna have to. I'm gonna hang out with the wife, you know. So check out the video on Palantir. But the thing with Palantir, yeah, I do think so. They have a lot of potential, keyword potential. I haven't done a deep dive, Andre, on INMD yet. But you know what? I'll take your word for it that the financials look too good. I'll take a look. I'll take a look tonight while I'm doing other stuff. All right. On that note, guys, thank you guys so much. You guys have been an awesome crowd, and I will see you guys on the next one. Check out tomorrow's live stream, I guess, if you want to stop by for that debate discussion, if it happens. And then at 7 p.m. tomorrow, I'll be on Strongman's live stream. Thank you guys so much, and I'll see you guys in the next one. Bye.